What's up everybody, welcome to the Stocks channel. Today we did see a volatile sell-off in the market, and the question is this just a pullback or will it become a stock market correction? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did see a volatile day and SPY did close 0.66% lower, and we did get a price action close below the 5 EMA. Intraday, you can see that we did bounce off of that critical support level that I told you about at 441. Remember, SPY 446 is a critical resistance, and yesterday, even though we did close over that level, it was only one day closing over that price target. Typically, you want to see 2 days closing over a critical resistance level so you don't fall for a potential false breakout. Was this a false breakout? Only time will tell, but I don't want you to get caught in a stock market correction if you're not going to be prepared for one. So now is the time to start preparing for a potential correction. We still do have the bull trend and we still are above critical support, but there's no doubt that we can definitely see increasing volume on selling, and it is possible that we are about to see the market roll over. So I'd much rather you be prepared for a stock market correction and us not actually get a stock market correction than be caught way too over leveraged and way too exposed to the long side during a very volatile sell-off. So take this seriously and start preparing now, and don't forget to watch that critical support at 441. Remember, your critical resistance is still going to be 446, and I want you to treat this with a lot of respect because this is a strong resistance level. Just like SPY 441, where we had a lot of trouble breaking above that level, it's very possible we hang around 446 for quite a while as well. Remember, if we break above 446, the next resistance level will be 449, and above 449, the market will likely start running towards SPY 460. But we're not going to see SPY 460 unless we can break out above these resistance levels, so give them the respect they deserve. If we break below 441, you will still have critical support levels down here at SPY levels of 437, the gap close around 436, and the 50 EMA right around 434. Remember that the market will look a lot weaker below SPY 441, so that is by far the most critical support level to pay attention to. We still have the bull trend and the price action still above critical support, so I don't want you to just panic sell your whole entire position. I want to make sure that you're preparing for a correction, and the best way to prepare is start raising some cash. That way you will have some cash to put to work at lower price targets as long as we are going through a correction. If we're not going through a correction, maybe you miss out on a little bit of upside, but it's much better missing out on a little bit of upside than it is taking a huge loss in your portfolio. So start planning now and manage your risk whatever fits your risk tolerance. On the Nasdaq 100 triple Qs, we can see a lot more concern in today's price action, going down 0.88% and closing below critical support, which is at that 20 simple moving average, which is just below 367. So we did close below critical support on the triple Qs, and we're still holding up above the next critical support level right around 362.7. So remember, below the 20 simple moving average significantly increases the probability we're going back to the 50 EMA, and on the triple Qs, that's down there around 358. On the way to 358, look for support at 362.7 and 360, but more than likely it's possible, if we don't see a strong bounce with tomorrow's price action, that we are coming back down to retest that 50 EMA. It's long overdue, and it's been quite a while since the triple Qs have retested that support level. To the upside, you'll now have resistance at 367, and we need to get back over that 20 simple moving average to even consider holding on to this bull trend. If tomorrow's price action cannot see the triple Qs getting back above 367, we could lose the bull trend, and that will mean we're going into a much more volatile and choppy market because we won't have any more bullish trending on the daily chart. We've had this bull trend for quite a while, and that's what allowed the triple Qs to continue to go higher day after day, because that bull trend is pushing the price action higher. If we lose the bull trend, look for a much more choppy and volatile market, which goes hand in hand with an August and September. Typically in seasonality, we do have a lot of volatility in this quarter. Jumping over to the Dow Jones, we were down 0.77%, and we're back below that critical price target at 355, and we did retest critical support right around 351, and we did bounce off that level. Price action is still over critical support, and we still have the bull trend. Watch the resistance levels above at 355, and above that we could hit to the next price target at 359. Critical support will be 351, and below that we're coming back down to the 50 EMA at 348. On the Russell 2000, we're back down to very critical support, going down 1.22% and closing right on top of that support trend line right around 216.4. You can see intraday we did retest support at 215, and we did wick below that level before buyers stepped in. We're below the lower Bollinger Band, but those will start to expand, And as you can tell from the moving averages, we do have the full bear trend. All of the moving averages are stacked to the bear side, so the Russell 2000 is looking a lot weaker. We did form a daily lower low, which does go hand in hand with a bear market and goes hand in hand with the bear trend that we just formed today. So if the price action breaks below 215, the floor could fall out and we could see the Russell 2000 coming all the way back down to 209. And below that, things really get ugly and the Russell 2000 could be going much lower. So watch the critical support levels at 216.4, 215, 212, and 209. And below 209, look out below because we're going a lot lower. We need to get back over this 50 EMA at 222 to even consider the fact that the Russell 2000 can shake off this bear trend. So watch that critical resistance above at 222, and we will have resistance above at 219 and 220 on the way there. On the Arkk ETF, we were down 0.93% today, and Arkk did retest that critical support level at 115.5, and we did close above it. We're back below the lower Bollinger Band for the second day in a row, and we are starting to build up some bearish trending. We're very close to having a full bear trend if Arkk continues to go lower, so watch support at 115.5, 112.6, and below that we could be coming back down to 109. Remember that Arkk did look like it was finishing out a correction, but we never got any impulsive bullish moves since, so it does still look like Arkk is correcting through time and just chopping sideways, very similar to what you were seeing on the Russell 2000. So watch the price action at these critical levels, and the upside resistance is still going to be 120 and 121. On the VIX, we did see a spike today with the VIX going up over 11% and the VIX closing at 17.9. Remember, yesterday we did see a divergence with the VIX going higher on the same day that SPY went higher, and that did lead to a sell-off today. We did see that before, so that's definitely a warning sign you want to pay attention to. The good news is the VIX did not close above 18.2, and while we did have a very volatile day, the VIX is still below 20. So it's not like this pullback is going to lead to a correction at this time as long as we see the VIX staying under 20. However, if you see the VIX getting above 20, and definitely above 23, that's going to look like a stock market correction. So watch the VIX closely because it is predicting fear and volatility in this market. If you see the VIX getting crushed back down to the low 15s, we could start grinding to brand new all-time highs yet again. On Bitcoin, we're currently down over 2.3%, and Bitcoin is below that support level at 45,000. So the next support level I want you to pay attention to is down here at 43,000, which is also our 20 simple moving average. We still do have the full bull trend, so there's no reason to believe that Bitcoin is rolling over as long as we're above 43,000. Below 43,000, I want you to watch the next support level below, right around 40,500, which is also going to be the 50 EMA. Our price target is still above at 51,000, and I do think Bitcoin is going to hit that level. And if we break above 51,000, we could start running to brand new all-time highs. So watch resistance above at 45,000 and our price target at 51,000, and watch that critical support at 43,000 and 40,500. On Amazon stock, we were down 1.73% today, and we see Amazon below that support level at 32.80 yet again. Remember, the gap close support level at 32.08 is going to be a very critical support level for Amazon, and that should be a very good buy level for Amazon stock. Remember, Amazon is a long-term trade because there is a huge gap to fill above at 35.80, and you have to be willing to hold this trade for a long time to close that gap. So the next strong support level to buy Amazon off of is going to be 32.08. If we break below that level though, watch out below because we will be in a full bear trend. The 20 simple moving average is very close to crossing below the 50 EMA, which does mean Amazon stock will actually be in a bear market. The price action is below all the moving averages, and we're very close to having the full bear trend. So if we break below support at 32.08, this will become a falling knife and it will be a short at resistance stock, which would be very bad for the triple Qs and the NASDAQ 100, so watch for that closely. The upside resistance will be 32.80, 33.11, and the resistance trendline level right around 33.75. On Tesla stock, we were down over 2.9% today, and Tesla did have a very volatile day and opened yet another gap above. To the downside, we have this critical support trend line right around $653, and that level did hold up as support. If we break below that trend line, that would be very concerning because that trend line has been very strong for Tesla for a very long time now. Below that trend line, we're going back down to the support at 626, and below that, we could be going back down to 594. The price action's below all the moving averages, and we did lose the full bull trend today, so you need to be very cautious with Tesla and watch the critical support levels. To the upside, we'll have resistance at 672, which is our 50 EMA, and we do have gaps to close at 676, 715, and 732. Also watch for a resistance above at 686 and 692 on the way to close those gaps. On Apple stock, we were down 0.6% today, and the price action is still above the positive sloping 5 EMA, and we still have the full bull trend. Remember, as long as we have the bull trend on Apple, the price target is above at 156, and we can definitely see those Bollinger Bands are starting to expand while Apple continues to head higher. As long as the price action is above 149, the price target is 156, but if we start breaking down below that critical support at 147, I want you to watch support levels at 145 and the 50 EMA at 142. Below the 50 EMA, we're very likely closing the gap at 137. On the financial sector, we were down 0.7% today, and we did close below the 5 EMA, but we still do have the full bull trend. The financial sector at this time is still looking very strong. The industrial sector was down just over 1%, closing right on top of the 13 EMA, and we still do have a full bull trend in the industrials. The healthcare sector was very strong today, going up 1.18% on increasing volume and closing well above the 5 EMA with a very strong bull trend. The energy sector was down over 1%, closing below all the moving averages yet again and regaining the full bear trend. The energy sector is trying to fight off a bear market yet again, and we need to see the price action getting back over the 50 EMA to even think about going back into a bull market. So jumping back over to SPY, you can definitely see that we do still have bull trends in the sectors and the indices, but we're definitely seeing some weakness in the price action. The triple Qs closed below critical support, which is always going to be a warning sign, especially considering that SPY is over 30% tech. So watch the triple Qs because it could be a leading indicator, and we still do have Apple, which is our market moving stock, which is still in a bull market. So don't rule the bulls out just yet because this bull market is not going to die easily, and this could still very possibly be a bear trap. I still want you to be cautious, and I still want you to start preparing for a correction because we do have somewhat limited upside and the potential risk for a huge downside. So be cautious and be prepared. And like I said, I would much rather you missing out on a small move to the upside and not losing to a big move to the downside. Sometimes you have to weigh your risk and reward, and the higher we go, the more risk you're going to have in this market. This time is overdue for a correction, so just go ahead and start preparing now. And typically speaking, August and September are very volatile months anyways. So watch critical support and critical resistance and just continue to follow the price action. Don't forget, I also have my own trade alert service that only trades TQQQs, and it does very well in volatile markets. This volatile market could be the best time to try bank trade alerts, and I'm currently running 50% off promo code for your first month. If you're interested in trying out bank trade alerts, you can find out all of the details on how to join in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.